Same taxpayer rule. When structuring a transaction as a 1031 exchange, it's important to remember that the taxpayer that is selling has to be the same taxpayer that's purchasing. A good rule of thumb is to see that you have the same either Social Security number or tax ID number that matches the same Social Security number or tax ID number on the purchase side as well. There are exceptions for disregarded entities, such as single-member LLCs, trusts, certain types of land trusts, such as Illinois land trusts or Massachusetts nominee trusts. So you can sell in one entity, or say you could sell in your individual name, and then form a single-member LLC to purchase, of which you, the taxpayer, are the sole member, and that works. So you can have the same tax ID number on both sides of the transaction, and sometimes with the formation of a new single-member LLC, a different tax ID number, but as long as the underlying taxpayer is that sole member of that LLC, that works. The reason why this is important to remember is if you are a member of an LLC, of a partnership, of a corporation, of any kind of business entity like that, technically the way the IRS looks at it in most cases is you don't own real property. You own an interest in an entity, and that entity owns real property. If you sell as that entity and then try to purchase just as in your own name or a new LLC that you own, it's not going to be the same taxpayer on both sides of the transaction. And that is a requirement for 1031 exchanges.